Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the October 6th, the Taco Tuesday, or the Thirsty Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, and in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we got a bit of a mixed bag out here. Kind of the mixed bag we've been looking at for the last several days, even though it's only the second trading day of the week, and that is the NASDAQ is trading a bit lower. The rest of the indices are trading higher out there. So let's try to figure out what all of this means. So what I think all of this means is the following. First, let's go take a look at our daily profiles, daily and weekly profiles, that is. Now, what I am using here, the ES, the NQ, and the Dow, it is using my synthetic version. Let me just as an example so you can see the difference here. So in the synthetic version, I've got all the historical data, and therefore I feel very comfortable with the profiles that are generated for the larger time frames. In this case here, the weekly, 3417. If I switch over and take a look, it's not going to, wait, I can do it right here. Can't I? I think I could do it right here. Yeah. So here now we're taking a look at the December contract and see the green profile. The top of that profile level is 3457. Now, I'm not saying that it's wrong. I'm just saying that the next stop, the next resistance level is not the profile coming from the weekly chart when I take a look at the December contract. And the reason is because when I open this up and you start taking a look at the historical data out here, you'll see that we basically have nothing going back from February 24th earlier. So here's the deal. Here's the level inside the ES Mini that you're looking for. You're watching for 3407 right now. Odds favor price going to make a run for that 3417. No idea whether price can close above it or not. If price does close above it, then what that would give us as a next projection area would be the 3457 level. So let's go take a look at the ES Mini. Give me a moment here, if you would, just to change over my other charts with the ES Mini. We'll take a look at each of these one by one so you can get a feel for what the market is communicating to an hour. I'm just simply going to lay out the facts. You then go ahead and draw your own conclusions out here. I'll help you draw some of those conclusions based upon the tools and how they work and what they mean out here. But if we do take a look at the ES Mini, the A to B equals CD pattern, which would really set up the Gartley sell. Now, this would be, for those people that are bearish or want to get bearish out here, this would, I don't know what's going on with the system out here, but here's your A to B equals CD pattern. There we go. And the 1-to-1 would take us to 34.90, and the 1-to-1.2, 35.41. So if we come back and we take a look at that 34.90, 30, so forth, that gets us up in that December contract, top of that weekly profile. Again, don't know whether that's going to be the outcome, but I can certainly see it on my charts on my screen out here. Price above Stevie's green line, that's at 33.62. You're only in day number 2 of a TD9 count, so there's no bottoming type of a signal here. Yes, price has gotten back to an area from the trading day of September the 16th, and really price would need to close above that in order for anyone to, technically speaking, be comfortable that, okay, you know what, price is going to likely go ahead and make that extended 1-to-1 or 1-to-1.272 A to B equals CD pattern. That would be a close above 34.1950, that which would be above the top of the weekly profile. So there you'd have 2 types of signals. We don't have that as we speak right now, but conditions inside the ES mini, inside the S&P 500 are bullish. However, there is a caveat here, and this is the problem. This is the fly in the financial ointment, so to speak, out here. And I don't know what to take. I don't know what to take. I don't know what to mean. I don't know what to take from it. Let's just skip that. Let's just go right to it. What I'm referring to here is that spot volatility index. Now, what it did today, it tested and rejected the 50-day exponential moving average, the exact opposite of what it is that we would want to say to be able to carry out the bullish signals that we just looked at out here. Ordinarily, and on a day like yesterday and a day like today, you would think that what the spot volatility index could do is bust through the 50-day exponential moving average level. That's 2680. We're trading at 2790 right now. The low on the session, 2601. So yeah, tested it and rejected it. So one possibility is, and this is for us to be on the lookout for, is you could see price get up to that 34.17 in the ES mini, and that's it. Forget about that A to B equals CD pattern that I looked at out here. We'll just have to, with the spot volatility, it's just dangerous. This is the true musical chairs game. The question is, when is the music going to stop? Now we're trying to find short-term time frame patterns out here to assist us with that. Is there anything? Well, here's the 30-minute time frame chart for the ES mini, and as we speak right now, we just have an extension, price moving higher, doing less relative energy, generating the Rhodes momentum indicator signal. You can see that, so it's stretched. We had one earlier from this morning at 9 o'clock, and that generated the bearish reversal candle, but all price did was a pushback and it tested support. Never busted through support, 33.89 to be exact. That is the bottom, is the bottom of the TAS daily profile. Price is trading above that level right now, 34.03 or 34.07. Unless there's a bearish reversal candle that forms out here, some type of real bad news, that's the danger with that spot vol, in my mind, the danger with that spot volatility being above that 50-day. But it looks like it's still that run to 34.17 out here inside the ES mini. If I look at, there's about 5 different time frames. Well, the time frames that I really monitor, 30, 60, 120, 300, daily and weekly. So those are the 5 time frames that I absolutely monitor. And as I look at my screens for any other types of topping signals for you and I to pay attention to inside the ES mini, the only one comes here from the 5-hour time frame chart. We are now, this next bar here that we're in closes at 2 p.m. And that clearly, at least at this stage of the game, appears to us to be bar number 9. Now, the last time that we had bar number 9 on a 5-hour chart form out here inside the ES mini, this was at about 4 o'clock in the morning, and this is back on the trading day of September 29th. Yep, September 29th out there. And then we can see that, in fact, price did move lower out here. So there is that possibility. Now, remember, it could be bar 9 or the bar following bar 9. So if price begins trading above the high of the session today, between 2 and 5 o'clock, that is going to generate the bar following bar number 9. So what you'd be doing there is watching the open at 6 o'clock. Because if we do form a TD9 count pattern on the 5-hour time frame and price automatically begins trading above the high of that pattern, boy, it's a strong momentum move. Not saying that's going to happen, but you know what to watch for. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're taking a look at, before we went to break, we were looking at the 5-hour, the 300-minute time frame chart for the ES Mini. Mike inside the Tiger's Den wanted to take a look at the Russell 2000, looking for a top. So here's the 5-hour time frame. Now, what I'd shared with you on that 5-hour chart for the ES Mini was the TD9 count pattern that was underway. The ES Mini actually completed its TD9 count top, or so we thought, at 9 o'clock this morning. And you can see that this is the bar is labeled number 1. It's the bar following bar number 9. It's the high of the overall pattern out there. This next bar closes at 2 p.m. And if there's a close above, which it looks like there's clearly going to be a close above it, it's telling us about a substantial, significant momentum move that is underway out here, Mike. So what the 5-hour time frame chart is signaling to us is that there's more upside potential for the Russell 2000. However, this is not the only tool that you and I use to make a determination on potential tops or bottoms out here. You can see that the Russell 2000 bottom with a nice Rhodes momentum indicator bottom. Here was the bullish reversal candle. It was both a bullish engulfing and a key reversal candle that identified the bottom out here. Now, from that low, Basil just did, I'm sure, a magnificent show out here. If we go from that low and we begin doing our wave count, we'll see that we are either in wave number 7, that's letter G on my screen out here, or when wave number 3, that's letter C, that's on my screen out here. How do we know? We don't know. We just simply have to watch price action. But at wave number 7, letter G, is where we can see a change in trend. Now, what else do we have out here? Well, we've got an A to B equals CD pattern. So we've got some price projection. We can use our flow price projection tool out here to get an idea of where price is headed to. It also gives us a real key piece of information coming off of that C point of this A to B equals CD, which was about a 0.382 retracement, was actually 38.3. Boy, it was perfect out here. Now, if you take a look at the move along the C to D leg, notice how price here, Mike, is way on the inside left of the C to D leg out here, a stronger move than really the A to B leg. This is suggesting to you and I, and this has made the 1-to-1, that it ain't done yet. And its next move is up to the 1-to-1.272. That's at 1623, and we can't count out 1659 out here. So the 5-hour time frame chart for the Russell 2000 looks pretty good, but we're not going to stop there. Why? Because we're going to go up a level. We like to go up a level. We want to go see what's going on in the daily time frame. And I would throw out to you, what's the key number to be watching at today's close inside the Russell 2000 equity future contract to assist you with what it's trying to do? Well, let's pull over the file and see if we can go figure this out. I don't know if I can. Wait, this is the Russell 2000. This is the daily time frame. Sure, we can do this out here. So let's take a look at where it has priced stopped before out here. Where has been the significant resistance levels out here? Take a look at the daily time frame. You know what? Instead of the daily right now, I'm going to come take a look at the weekly, because maybe the weekly displays it a little bit easier for us. We'll come back to the daily out here, but let me take a look at the weekly. The weekly, now granted it's only Tuesday, but yet I want you to understand, Mike, where the battle really is, or I believe the battle is out here. We're just simply we're taking a look at this, utilizing our Japanese candlesticks. Now here's where we can use Japanese candlesticks, not for the completion of a pattern, but to help us understand support and resistance out here. And what we can see on this weekly time frame, and I've got the level, this is the high of the trading session for the week of August 14th, 1605.70, and I've drawn a blue line across it. Right now we can see, and the reason why that is a resistance point is because the following week was a bearish engulfing candle. When you have a bearish engulfing candle, it is the high of the candles that are being engulfed, or the engulfing candle itself. It's got to be the high that becomes resistance. So price right now is trading right up into resistance out here at the 1605.70 level. And if price closes above this area here, it's telling you it's got some power to run. Now we got to come back to the daily time frame out here. And on the daily time frame chart, of course, you didn't tell me your time frame, Mike, that you're looking, from a trade where you need information from. We've spent time on the larger patterns out here, the 5-hour, the daily now. And inside the daily, you've got a confirmed Gartley sell pattern. Yeah, this was a Gartley sell pattern. It had the A to B equals CD. I'll just draw that in versus drawing the nice shaded areas out here. But here's your confirmed A to B equals CD pattern. You can see it was a 1-to-1, and it. Hold on a minute here. I don't even have a bullish reversal candle out here. Okay, well. Hey, sometimes you get it, most of the times you get it. In this case here, yeah, I don't. It's not even a key reversal candle. So I can't. All right. So all right. So now what do you do, Stevie? Well, look, since I can't really say it's a Gartley's buy pattern, I can't really go down that thought process here that I had, and you don't even know what the thought process was. Yeah, look, here's the thought process. If we go scan back on the left side of the chart out here, you can see how price on the daily basis is taking out resistance. So let's just finish this up with regard to the Russell 2000 and take a look at the short-term time frame. If it's going to identify a top out here, if we take a look at a pattern, the pattern that would be in play at this stage of the game would be its TD 9-count pattern, Mike. And from a TD 9-count standpoint, you're in bar number 7. So that says it would be either the bars on 8 and 9, the bar following 9, that could identify a short-term top out there. And that says that doesn't occur until 2 p.m. at the earliest, so it'll be between 2 and 3, just in time for the polar plunge. So how are we going to summarize all this stuff out here? Right now, the Russell 2000 looks mighty strong out here. And that's courtesy of both the 5-hour time frame, the weekly time frame, the 30-minute time frame says, okay, maybe we get a short-term top in the next hour and a half out there. But price is going to have to bust out levels of support in order to generate any kind of change in trend signal. I know you might say, what do you mean by that, Steve-O? So good question to ask me what it is that I mean, especially on a day like today, because I'm asking myself, what is it that I mean out here? That much confuse you. So let's go take a look at it. How do we take a look at it? Where's the, oh, okay, let me just pull this over here. I'll stick with gold for a moment here on this chart. So this is a 30-minute time frame chart. So if we're going to see a change in trend inside any kind of instrument, the upside or the downside, Ideally, what we should see, not ideally, what we will see is we will see breakdown levels of support fail to the downside, or breakout levels of support fail as prices moving lower, such as 1913.90. This is the 30-minute time frame chart for gold. If you're asking yourself the question, why did gold top when it did this morning? How would I have known that it was a potential top out here? Well, all you have to do is use either the TD9 count pattern, the Rhodes Momentum Indicator signal. Both of those are patterns that I teach the subscribers. I would love to teach it to you. You've heard the commercial out there. I'm not being disingenuous. I would love to teach you that pattern. And for 29 days, you can, in essence, access it for free. And then you make the decision whether it's worthwhile or not out here. But here, when we take a look at, so you had really three patterns that were going on. I've got wave number 7, that's the letter G count. I've got a TD9, it was the bar following bar 9 that made the high. Price is moving higher, doing less relative energy. We got the Rhodes Momentum Indicator pattern. You had the bear sash candle. What price did was it busted through the first level of breakout support, 1913.90. When you break one level of support, you typically go to the next level. The next level is 1904.20. Where did price get down to? It got down to 1905, missed it by $1.20 on a $1,900 instrument. Well, look, it may not be over. There is no signal out here on this 30-minute time frame of any kind of a bottom pattern. So the target for gold right now is 1904.20. Let's take a look at the NQ out here real quickly before we go to this break. On the pullback this morning, we take a look at the NQ. Did it bust any levels of support? The answer here is no. That level of support, which held yesterday, is 11,280.25. You can see how it was tested and rejected. Know your nines. Know your TD9s, folks. Steve Rhodes with TFNN. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one last element on the Russell 2000. We can see today is bar number 7 of a TD9 count. And if this pattern is going to identify a top, Mike is looking for a top out here. That says that it wouldn't form. We wouldn't see the high until tomorrow, Wednesday, Thursday, or Friday. Those would be the days that you would be looking for. But this is suggesting that today is not the day that you would see that top for that pattern inside of the Russell 2000. We had a request that came in earlier today, and that was to take a look at ticker symbol COP. That is ConocoPhillips out here. I think it was Jim that had written in for this. And so if we take a look at ConocoPhillips, here's what we know at this stage of the game. Right now, price has tested and rejected the top of a bearish structured profile. Now, Jim, I know you either want to go long or you are long out here, and so you would love to see price close above 34.08 today. Price closed above that level yesterday, but it's a brand new profile that is formed today. It's bearish in structure. When you close above the top of a bearish structured profile, we like to say there's nothing more bullish than a failed bearish pattern. And now if price closes below 34.08 out here, ConocoPhillips is not out of the woods. Where's its next price target? Now, for a price target, we're just looking for where's its next resistance level. We're doing that based upon our market profile charts out here. That's very simple. We can see the weekly. That's in the center out here, and that's at 36.96. So ConocoPhillips, as long as it holds 34.08, Mike, chances are it's headed up to the 36.96 level. Monthly time frame doesn't give us much assistance. Everything is trading below its profiles out there and with inside the weekly. Now let's go take a look at Stevie's other charts out here, get a feel for what kind of bottom, if any, was put in yesterday or a couple of days ago, 2 days ago. So what do we know out here? We know that ConocoPhillips formed a TD9 count. Now, the last time it formed a TD9 count, what you got was a 5-day rally, rallied right up into the resistance of its current profile out here. No, I take that back. We just got a brand new profile. So that one is gone. It's off to the side out here. So this is suggesting to now, okay, all right, perfect. Don't worry, I'll get it figured out here. I'm going to just expand this out. So Jim, here's what we also know. You're dead on balls, right? It did form a TD9 count. Price is also pushing lower, doing with less relative energy. No bullish reversal candle. But there is a resistance area, and that's at 34.81. That is the breakdown resistance level. So those are the three. So you're looking at 34.81, and you're looking at the top of this daily profile. Try to get out here again. 34.08. So in one case, we have a bullish message, TD9 count. But on another instance, with price being unable to take out that resistance of 34.81, it's questionable. It's questionable. But if today closes above 34.08, it still is questionable. It's at 34.81. And so it really depends on the time frame, Jim, that you're looking at as far as taking this trade out here. If you're going to buy the retracement, if the did retrace, I mean, it gets questionable. You're looking at about 32.11 to 32.70-ish as the range out there. Let's go look at the weekly. See if the weekly is giving us any kind of signal out here. And voila, as we populate this, the answer is no. So the weekly formed a TD9 count top. And price here, it looks like it's trying to pull back to 30.52. And based upon the other failing TD9 count pattern, the one that formed on September 11th out there and had a 5-day rally out here, not so sure. I'm just not so sure on this one. I mean, we're taking a look at the numbers. The monthly is not providing us with any kind of a bottom signal out here. Resistance at about 41.85. So what do? I'd say if you want to take this long, let me tell you the next price projection level, if price can close above 34.81. And that's going to be 38.45. So from there, you can do your reward risk calculation. If it is worth it, is it worth it right now? I don't have clear signals. I can give you the buy signal. You already identified that. What you didn't have, perhaps, was resistance. Maybe you did. Maybe you knew it was at 34.81 out there. And now you've got the profiles, the daily and the weekly out here. So, yeah, when you have information that can go either way, and it's right now I'd have to say it's a coin flip, and don't put your money at risk out there. So I hope that helps you out. Thanks so much for writing in. I see Mike S. has written in, and he wants to take a look at ticker symbol SDGT. SDGR. So let's go see what SDGR. This is Schrodinger Inc. out here. Probably did not pronounce that right, so my apologies to Schrodinger out here. But Schrodinger Inc., Mike, you didn't tell me what you're looking for. You just want to look at it. So here's what we know. The top of the daily profile out here is what it's trying to take out. And that's resistance, and that's at 56.58. The high today, 56.48. Missed it by 10 cents so far. Don't know if price will be able to take it out or not. Price is trading below the bottom of the weekly profile. If price can take out 58.58, meaning closing above it, then the price target becomes the bottom of that daily profile, 63.37 to 71.39. That would become the targets. Now, let's go look at my other charts out here, see what we can see. And in the case of SDGR, what we see is a nice Rhodes momentum indicator bottom. And that bottom confirmed for you out here, Mike, on September 25th with that nice bull sash candle. So, and then you had a nice little bullish structured profile that formed on the very next session. So really this had everything that it needed to suggest to you that price is going to make a move to the 56.58. That's already done. If Schrodinger, or if that's how you pronounce it, SDGR, Mike, can close above the top of that daily profile, 56.58 out here, then price should be on its way up to $70 even Steven. That's its TD9 breakdown level. So that's a daily, so it looks pretty good out here. It's just you're up at resistance. I wouldn't ask you to buy resistance. I'd say try to buy a pullback, and that pullback would be between 48.61 and 50.39, give or take a few pennies out there. If we take a look at the weekly time frame chart, not enough data out here, it appears, to really provide us with much other than, well, I take that back. There is some nice data. That nice data was the week of September 25th. This formed a weekly TD9 bottom out here. So it is looking good. There's not going to be enough data on the monthly. That much I can see. So everything's looking good. You either have to buy the breakout to close above resistance, 56.58, or buy a retracement, and that would be in the 48.60 to 50.39 type level out there. So hope that helps you out, Mike S., with regard to SDGR. No other questions that I see in the queue out there in the den. If you want me to take a look at something, would be more than happy to do that. In the meantime, let's go take a look at some of the usual suspects out here. Let's go take a look at the U.S. dollar index. We take a look at it. What do we know? Well, we know that this right now, yesterday closed below Stevie's red line. That's 93.65. Now, it's red, and red says you're dead. No, I'm just kidding. Red is not a good line to be trading below, because then you've got a falling price oscillator below zero out here. Well, let me update this. Yesterday was day number 5 out here of a TD9 count. Today looks like it might be day number 6. At this stage here, the message from this chart for the U.S. dollar index is sideways to lower type movement. Maybe it completes its next bottoming signal with a TD9 count out here. But unless price can regain Stevie's red line at 93.65 out there. So that's what the U.S. dollar index is doing. We took a look at gold, I believe, a little bit earlier. Let's go take a look at light sweet crude out here real quickly. Light sweet crude, let's see if I can get there in the next few seconds out here, because this would really pertain a little bit, certainly, or maybe a lot of it, to that question about ConocoPhillips. So the good news here on light sweet crude is that it is trading above 39.43, which is the top of a profile out there. This is suggesting we may see crude oil run a bit higher out here. Steve Rhodes with TFNN. Be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Dan from Boston is asking about Netflix, and Dan wants to know, are the charts suggesting that Netflix will hit 530 this week out here? Right now it's trading at 515.29. So Dan, I don't know if I can answer that question specifically, but let's go take a look at where the battles are drawn with regard to Netflix. So as we take a look at this set of charts out here, we can see that price, this may be day number 2 in a row, 2 consecutive days, with a close above the top of the profile on a daily time frame, which is 512.65. So 512.65 is a number that you're looking for price to close above. If it does that, the resistance level out here, and I can't say that it's going to happen by this week, but the resistance level on the weekly time frame is 558.26. Now that's the top of its weekly profile. But what you and I don't know on this chart here, because I don't have the oscillator and change line for my e-signal charts out here. I guess I could spend the money and put it out there, but I've got it on my other charts, so we're good. So we need to see where the battles are going. I don't know on your 530 if that's a battleground area or it's just really just the prior high. I would guess you're just going from the prior high out here from October the 1st, which would be logical. So your question is price going to be able to get up there? So let's go take a look at the Netflix charts out here, the daily, weekly, the monthly, even the quarterly if we want, and we can always take a look at Netflix on a 30-minute time frame. But here's what we know about the daily time frame. Again, price is above. So it's very bullish. When I say very bullish, it's bullish from the setup of Stevie's green line out here. And I think we talked about this yesterday on the trading day of September 3rd. That line changed colors from red to green. It was a test and rejection. That was a suggestion to us, Boston Dan, the price was going to go at least test the top at that 512 area. It's done that out here. If you get 2 consecutive days, you got a rising price oscillator above zero. It's certainly saying that it wants to move to higher ground out here. If you just follow typical Chapman wave rules, you're only in wave number 2 or letter B on my screen out here, so it should get to higher price. By the end of the week, that's a more difficult call to make, but at this stage here, the daily time frame chart is suggesting higher price. It's the weekly that shows us where the actual real battle is at. Let me try to get out here to the weekly time frame chart. And the weekly time frame chart here is showing us that price is sitting right on its oscillator unchanged line at the 515 level. So if price can close above this, it's another positive. If price doesn't close above this, you really know where the battle is drawn out here. And you're going to need to see price closing above this on a daily basis today, tomorrow, Thursday, let's say, really today and tomorrow, you'd think. But today, tomorrow, Thursday, if price can close above that and stay above it, well, then you have a rising price oscillator on the weekly time frame. So that's bullish. And that says, okay, yeah, price wants to continue to move higher. So if you're asking me to answer the question, do we see that Netflix is suggesting to us that it wants to move higher this week? Well, here's your battle. And right now, it's a tug of war. It's right dead center. It's sitting right on it. And so I can't answer that question. So in order to answer that question, though, when I say I can't from this set of charts here, let's go look at the shorter term time frame. Forget about the monthly at this stage. The daily and the weekly are giving you and I enough information. So now let's go take a look at the 30-minute time frame. On a short-term basis, what is the signal to you and I with regard to Netflix out here? So let's unload. So here we take a look at Netflix, beauty out here. Netflix had pulled back. And it pulled back to test its breakout level. So if you're ever, one of the first things that I learned from Tom back in 2006 out here was, and at that stage, they'll tell you I had 80 or 90 different individual positions on at that time. And so it became an entire weekend chore to manage, go reset stops, targets, and things of that sort. But it was always that, hey, when something was breaking out, where do you buy it? Do you chase it? And of course, Tom was saying, you know what, wait for it to pull back to the breakout level. Where's the breakout level? A number of different ways to do it. I'd say the most consistent, the most objective way is to use the 9 system, the TD9s out here. The breakout level on a 30-minute time frame was 503.60. And if we take a look at what price did back here at 10 o'clock in the morning, this is at the open. This is on October the 5th. This was yesterday out here. What did price do? Came back, tested it, rejected. You saw one slight close going into the close the day before out there. But again, that's why we look for 2 bars out here, because that was a false breakdown reading. Price held support. It's moved higher. Now, on a short-term time frame, price is trading above the top of that 30-minute profile, but not trading above Stevie's green line out here. So you want to see it on a 30-minute time frame out here, Dan, get above the 515 and a quarter level out there. If it can do that, then on a short-term time frame, it's saying, okay, I want to make that move higher. To the extent that it doesn't do that, instead what Netflix is suggesting to you and I is that because it's trading below Stevie's green line, you have to anticipate that price may pull back to the 503.60 level. Not that it will break down, but it could easily pull back into that area. We don't have that message yet because still price is above the top of its daily profile at about just call it 513. We're at 514 and change out there. So I hope that helps you out. How do we summarize it out here? Look, the 30-minute chart, even though it's trading below resistance, we saw a pullback yesterday, came back, tested, rejected support level. So this is saying this wants to make a run up to the 526 level. The daily time frame, as long as price can stay above, close above 512.65, it's suggesting it wants higher price. But you've got your work cut out for you on the weekly time frame because of that tug of war. And so in this football game out here, it is not clear. It is not clear whether Brady is going to be able to find Gronk out here. It's just not that clear to be. But maybe it's clear to you, but there you go. At least you understand from a chart standpoint where the battle lines have been drawn. Okay, let's see if we've got any other requests out here. I would like to get to anything else that has come in. Looks like we've gotten through everything by email, everything that I know of inside the Tiger's Den, and we still have a little bit of time. So what is it that we want to look at? I've been looking to try to figure out what is it that I can share with you that would be most helpful in understanding what is going on. And even when I take a look at the top 10, well, the top 8, the top 9 holdings inside the NDX 100, I don't have a clear message. So, for example, out here, here's Apple, the number 1 holding, approximately 13% as of late last week out here. But in price is just you can see the resistance level 117.26, the top of that daily profile. That's your real resistance area. But even Stevie's green line at 115.49, that's a resistance area. So no breakout inside of Apple. Now, if Apple can close above 117.26, whole different story out there. Whole different story. But we don't have that story just yet. So it's just consolidating. Hasn't broken down, at least during this segment of trading the last couple weeks, because price is consolidating inside its daily profile. Microsoft is the number 2 holding, or approximately the number 2 holding, with about 11%. And here, price is trading where? Below the top of its daily profile out here. So again, another consolidating, nothing bearish yet. Prices above Stevie's red line or green red line out there. So it's really a neutral signal inside of Amazon as well, trading between Stevie's green line and the top of its bearish structured profile out there. However, you can see we've had several tests of the green line out here, and if price can close above 31.8271, Amazon will signal to you and I that it wants to make a move to 34.88. Not until that time will we get that signal. 31.8271, that's the number to be watching inside of Amazon. This is Steve Rhodes with TFNN. The Dow's up 83, S&P's up 5, NASDAQ 100 down 42. We'll be right back to close things out.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So currently we've got a mixed bag out here inside the market. Dow's up 85, S&P 6. NASDAQ is the one that's struggling. The NDX 100 only down about 3 points. I'm sorry, the NDX composite 3 points, the NDX 100 40 points to the downside. Vicky was asking if we could expand a little bit on Apple. I don't know if Vicky is long, short, but here's where the battle is really being drawn. It's really between the price range here, Vicky, of 117.26 and 118.45. 117.26 is the top of its daily profile. The more important one is 118.45. That's the top of its bearish structured weekly profile. That is where Apple would need to close above on a weekly basis, 118.45, in order to really tell us that it's got its mojo back out here. There's nothing broken just yet inside this instrument out here. I would have to say if we see a close below 103.80, that's the bottom of that weekly profile, then we're looking at something else. In fact, we'd probably be looking at A to B equals CD to the downside. That would take us to around $83. We don't have that just yet. So if you're with regard to Apple, the battle line right now in the daily, it's 117.26. Closing above that isn't good enough. We need to see it close above 118.45 out here. And my wingman, David White out here, your favorite polar bear, in fact, he sponsors the Polar Plunge. He says the options for Apple are very bullish. Well, if that's the case, David, then we're going to see Apple close above 118.45, and then the TAS market profiles would be in agreement with what you're seeing in options activity. So, folks, that was a great segue, a great lead-in. Maybe David will be able to share a little bit more about that with you, Vicky, and the rest of you. So stay tuned and listen in for that. And then, of course, after that, you've got the Tom O'Brien Show. Thanks so much for being here on Terrific Tuesday, folks. Have a terrific one, a thirsty one at that. And stay tuned for 2 more great hours. We'll look forward to seeing you on wonderful Wednesday. Take care.